Hello and welcome to our second video on liquidity. And in today's video, I'm going to be explaining the two types of liquidity we have in the market: horizontal liquidity and dynamic liquidity. We're going to be getting through these illustrations and then we'll go straight to the chart for a real-time example. Right? But I'm going to focus more on horizontal liquidity in this video, so I can just make sure that we understand it properly. The next video we'll talk about dynamic. Okay, so if you're new to this community, this tutorial is brought to you by Pips like X, and our WhatsApp number is +234-8055-369615. And I, Investor Theo, will be your host for today. So basically, this community is our YouTube community. I have this tutorial on YouTube, so do not subscribe to our YouTube community, turn on notification bell, so I can get updates to more contents like this, trading contents, like our videos if you can, and share to others to help them out too. Alright, so horizontal liquidity is going to be our area of concentration in this video: equal highs and equal low. Now, some of us are trade chart patterns. This should not be new to us. Chart patterns will tell you trade W chart patterns and trade M chart patterns, right? Trade M chart patterns. Trade M chart patterns. If you learn with chart patterns when we're learning chart patterns those days. Basically, here W and M. This M didn't come out well, but yeah, I'll draw it again. Basically, your M chart pattern is more like this. Yeah, so you're gonna have your M looking more like this and your W like that. Then they'll tell you, oh, it will traces back to the neckline. The market will trace to the neckline. I don't know if you've forgotten all these things. Don't forget, trace to the neckline. Or then when it gets close to the neckline, right, somewhere around the neckline, it then starts dropping from there. If you learn to chart pattern, this is what you'd have learned when learning the M and W chart pattern. Same thing for W. It comes back to the neckline and starts going up. Now, little did you understand, Floyd, that this, yeah, chart pattern, cool. But when you bring it to SMC concept and the likes, is this dealing with you working with equal highs and equal lows concepts, and the market retracing back to a favorable gap or another block for its continuous movement. Right? So I'll explain better as we keep on going. So basically, equal highs, EQH stands for equal highs, and EQL stands for equal lows. I believe you get the concept. I'm going to write it on my screen so I can remember properly without making mistake. Okay, so we have the equal high equal low on our charts, or less on our screen so I can understand better. Now, if you watched my last video on liquidity, I think that's liquidity 1, where I did the analysis of why equal highs and equal low areas of liquidity, where money rests, others rest over here. And the more we have orders over here, this is where people keeping their stop loss orders. All right, the more we have orders over here, the more it becomes attractive. So if you watch my first video, you go and through. So if you watch my first video, you see the proper explanation there. You get the proper explanation on the psychology behind these zones. So I'm not going to do that again in this video because I've explained it already. This is a series. Make sure you follow it up properly. All right, so this is equal high and equal low. I'm going to show you this on charts and how they play out on charts. All right. So let's go. Today's class is going to be a very, very basic and straightforward class. We currently have a 1 ratio 4 points. Let me show you. I removed this so I can show you targets. We're targeting this high. This highest in process, 4.28. Okay, we're targeting this level, 4.28. We have our TPs at various level of liquidity. You can see 1 1 2 over here. So we're currently waiting for the first TP to be hit with this scenario. This is on Solana USD. This is the running chart. Look at it. It's counting directly. So basically, I just discourage you with that to say that we trade what we teach. All right. So let's just continue from this liquidity. Now this liquidity, we have liquidity over here. All right. And this tell you that there's money hanging over here, over here, over here. People tried selling right from this zone first time. It worked. Second time it worked. Third time it worked. It means people have many orders. People are expecting, if I extend this chart down here, if I say this chart, this money sign down, most people are going to be expecting to sell again from this region, right? And one thing about liquidity is that the market comes to clear the entire liquidity over there. So we're estimating that with this trade, the market will come over here. It can react over here, but it will clear it and still push all the way up. So that we have our typical hit, right? So you can see how liquidity is used to do that. But we're going deeper and deeper into liquidity as keep on going on. Okay, so here we have this period over here. We have this place as a zone of equal high. Right, remember what we talked about highs and low markets. So here's literally equal high. This is a high, right? Let me use my 2. Yes. So this is a high, this is under high, and this is under high. So this is a period of equal high in market. And the market usually respects these zones. All right. I'll teach you actually models with this concept and like. So yeah, this under place here. This is a period of equal low. This is equal low. Market touched here. This is even liquidity as inducement. Touch J, touch J, touch J. So equal low directly. So this is liquidity as inducement. I'm teaching inducements in future videos. So over here directly, you can clearly see that the market actually utilized this liquidity over here to enter a trade. So if you were working with this liquidity over here as inducement and you're having another block at the bottom here, you'd have missed entry. Let me show you with this other block over here. You'd have missed this entry because the market didn't come down to trigger you from here. Okay, but at least you'd have still gotten somewhere here as your entry in the long run. But I'm not a fan of using too far with that block. But yes, that got your entry triggered from here. If you had used this other block and this liquidity over here and work from here. But guess what? I won't consider this setting valid. Why? Because the liquidity over here has been cleared by this liquidity here. By this liquidity over here. Now, this video I'm not making it too complex because I'm explaining it and it has been cleared here. You can see this move to the downside over here to clear this liquidity. The market moved from liquidity to liquidity, trying to clear or collect money from everywhere it can collect. All right, so with another block here, using just this scenario from here to here, this box, then use the circle, using just the circle, right, to explain it, you see that you could not enter any trade here. So people that use the fair value gap principle will be able to enter a trade and use their guarantee to collect the 50 percentile or the fair value gap would have entered over here. So if I use fair value gap, this fair value gap over here, I believe you can see fair value gap. I've taught you fair value gap already. So but let me just mark it out for those of us that are new here. Although fair value gap has been touched initially, but it was not completely collected. Okay, there's fair value gap over here. Yeah, fair value gap has been actually mitigated already, but the market came back to retest the fair value gap zone at the 50 percentile zone, 50 percentile level, and you'd have used this to enter because the liquidity was more of an inducement to make the market come all the way down here. So if you had entered from somewhere around here, inside this zone over here, you have gotten your order triggered, and at least you have been able to make 1:3 or 1:4 depending on your entry model. But I usually trade 1:5 setups. Okay, sometimes 1:4 shows up, but yes, I usually trade 1:5 setups. So if you have gotten your long position 2 clicked over here and ready to trade this model, you have entry or buy from here, targeting the nearest liquidity, your stop loss beneath the liquidity zone. All right, and then your TP, this is 1:2, here that will be your 1:3, almost 1:3, right? Yeah, 1:3 will be somewhere at the top here. So this is what you have working with as your 1:3 setup, right? But in this kind of scenario, as usual, when you're in market, your SL will not be this high, SL will be directly beneath the other block. The SL is directly beneath the other block or the block with the fib. Okay, you'll be targeting here as your 1:3. The market didn't get your 1:3, but gave opportunity to take partials here, right, at 1:2. So you'd have taken partials at 1:2 and you'd have gotten stopped out at break even somewhere here or with your SL hits. So either way of getting stop outs would have worked against you directly, but that's not an issue. Let me see. Yes, we got stop out somewhere here. The market hitting our stop loss. So basically, this is the market for you, fam, and you understand how it works with equal highs and equal lows. I'll explain in future videos how you can use this to enter attention models. But this is just an explanation of showing you that okay, the market comes to collect liquidities at equal lows and equal high regions for you to understand. All right, this video is not meant to be long, hence I'm stopping it here because we have a video coming up that will explain everything in total. All right, just go to the market as an assignment, look for regions of equal highs and equal lows. You can use the cursor, you can just find it. The market always comes back to this region. That means what always mostly comes back to these regions to collect the money above them. Right, collect money above them. This money, there's money stacked right up here. The market usually comes back here to collect. I'm already doing an assignment for you. This is it. Just comes up, collects the money. All right. Basically, in tomorrow's video, I'll be talking about the concept of equal bounds on the trend line, that's trend line liquidity, so you can understand better. We actually got some insight into liquidity in this video. I appreciate if you hit that subscribe button and turn notification bell. And if you want to encourage me, do to hit the like button. Join my Telegram group via the link in the description, so you can get access to our Telegram community where we drop updates, setup signals, where you can trade profitably with crypto, FX, synthetics. All right, all for you for free. All right, and do to share this community if you want others to learn what you're learning to for free. Cheers to go, champ. Join us on X for quick instant updates and giveaways, and we'll go from there. Peace.